Good afternoon, everybody. Good afternoon. If you could give me a quick sound check, please. Let me know I'm coming through loud and clear, and then we can get going. All is good. Good. That's what I like to hear. So, hope you're doing well. Apologies to all. I am recording this session for those of you who will be undoubtedly expecting me in an hour's time. Instead, can catch up. Apologies to all for the abrupt change in the session. Had an important appointment this afternoon that I could only book in now, or then would have to inevitably end up waiting to get done at a later date, and I just couldn't be. I just didn't want to let it go that long, so that's why I'm here a bit early today. But it's absolutely fine. I mean, ultimately, it's going to be a normal Monday scan. We'll get through as much as possible, and then probably break down the FX asset basket, by half. We'll probably get to around the euro yen or so, and then as usual, we'll cover the rest of the assets tomorrow. We'll do obviously the inclusion of the US market breakout session this afternoon as well, covering off our commodities and, of course, checking our fundamental catalyst for this week on top. So, first of all, we will start with the fundamentals, looking at where we are at. So, today's date is October 21st. Amazingly, almost at the end of October already. Today, we've got no major catalyst whatsoever. Tuesday, we have the ECB President Lagarde speeching. Lagarde is speeching tomorrow twice. One at 3 o'clock in the afternoon, the next at 8:15 in the evening. So she's giving us a double whammy. We're probably going to be looking at more monetary policy clues tomorrow as to the direction of the ECB's monetary policy stance over the coming weeks and end of Q4 leading into Q1 of 2025. We're probably going to see, I would think, more clues as to their future monetary policy stance is than we did in the most recent ECB session that we had last week. Now, I don't expect each and every one of you to have sat down and actually gone, go through the ECB event. I myself did. Honestly, for you guys, so that I could give you an update. No, there's no other reason for me to at this stage, and there really wasn't too much in terms of clues or anything that I would deem to be necessarily too high risk or important. A lot of the the journalists and stuff, and the the reporters and stuff asking the questions. They asked the questions that we all wanted to get answers to. At the same time, it's the questions that were avoided and dodged, and that is the general rhetoric that we see from central bankers, across the world. It's not just Lagarde. She's just the same as all the rest of them. So a lot of dodging, but they did decrease the interest rates. The major CPI metric for their inflation, it is slowly coming back into target. And so therefore we are on course. The ECB is on track. Perhaps at a slower rate than we've seen elsewhere, but it is. And I would say at this stage, and I maybe this might be a bit of a bold statement, but I think they're probably more in control of their rates than anywhere else right now. I mean, look at Canada, for example, right? Canada at the moment, we're looking at a 50 basis point cut. As you can see on the screen right here, we've got the BOC's interest rate decision, looking at a 50 basis point cut back down to 3.75. I mean, obviously 50 basis point cut, yeah, because your inflation is getting slapped. I mean, their last inflation rate was, 1.75 or something? I can't remember it exactly off the top of my head, but it's below the 2% target now. The US, very much, US is kind of a mixed bag, but inflation's coming down harshly at the moment and very sharp. So they're going to really need to get that under control. And of course, us here in the UK as well. We're getting slapped by the interest rates and our inflation is tanking. And so we're kind of seeing a complete and utter shift in the inflation dynamic at the moment, where central banks are rushing to cut those interest rates down so that we don't end up having sharp and steep recessions. Whereas the ECB and the the European Centre Hub is actually doing well. Inflation's still high, don't get me wrong, but it is coming down nicely to that 2% target and in a controlled manner. We're not seeing from one extreme to the other like we have with the other G7 countries. So I think kudos to the ECB, and it will be worth grabbing a copy of the speech to see what's going on and see what she has to say tomorrow. And as a result, market impact, how are you guys going to be able to actually trade it? To be honest with you folks, I don't think there's going to be too much in terms of market impact / volatility, but it's about being aware of your surroundings. Will you be able to build positions upon that news and look at potential future positions that we can jump aboard? And that's my job, right? That's, if we're all of the mentality that I am the head of our firm and you guys are the execution traders and you are looking for those insights as to how you can build in your positions to your own portions of the funds, then that's the kind of setup that we need. So I will, pay attention, keep my ears to the ground, and look at potentially, look at the potential factors of trying to build in positions to that over the course of the next 6 weeks, and we'll go from there. So leading on to Wednesday then, we have the BOC's interest rate decision, which I touched upon anyway just a moment ago. We are looking at a 50 basis point cut this week from 425 down to 375. We also, of course, have the monetary policy report as well there afterwards, and that happens at 2:45 on Wednesday. So again, market impact is going to be, I believe, high. The currency itself probably will end up tanking, but that's the historic way to think about an interest rate cut. The currency follows the interest rate. But what we have seen is countries that have very low inflation with very high interest rates, if the interest rate's getting cut to allow some breathing room for the inflation to come back up to that 2% target, that is actually bullish the currency because it is bullish the economy. So I don't want you guys thinking it's just a black and white case of a 50 basis point cut, let's short the shit out of the CAD, because that's not smart trading. And that's not how you'll rarely hear me say I freaking hate the word, but smart money, that's how they will be trading it as well. Okay, so your banks, your institutions, and your professional trading places out there, that's what they're going to be thinking. So that's how we need to think as well. So that's that. Then we're graced with another Lagarde speech, and that's at 3 p.m. on Wednesday. Same kind of tone as the first lot. Thursday, we have the HCOB manufacturing PMI flash from Germany. Market impact minimal, even though it's a highly rated one upon the calendars that you will see. Don't pay any attention to it whatsoever, guys, to be honest, because it's not going to do anything. Friday morning, we end the week with the IFO business climate, which is definitely something that you should consider having a look at. That's at 9 a.m. Market impact, again, is going to be minimal for our trading assets. We're not really going to see too much actually bleed out into the markets itself, but it is still a good one to keep an eye on for future predictions in the euro, for example, and of course, our G40 stock index. And then we finish the week with the durable goods orders, the DGO, and that's going to be the monthly set there. We don't have the annual figures for that one. It's just the monthly set, which we're looking at a minus 0.9% figure from the US, really looking at their economy cooling off. I mean, even when it bleeds out into the DGO, we know that there's things that are really cooling off at the moment. We're in a bit of a freezing zone for the US economy there, which is not potentially good for their currency. Probably looking at that DXY, trading lower, even though at this stage we have seen a whopping move up with the DXY here at the moment, and it's currently trading at 103.64, as you can see here. We're actually inside liquidity at the moment. We do have a bit to break out above, but the DXY has been incredibly strong after coming back down to our liquidity zone here at 100.5 and 100 on the 100 flat. Really big bounce. So are we going to be coming back up to maybe 105, 105.50 again? and then continuing that kind of trend to the downside here, maybe looking at a potential lower low being formed? Or is this liquidity going to be the new base for the DXY, and we're actually going to see that push above? I mean, we've got some time to analyze this and think about this. There's no immediate rush, but it's just interesting to see, for me at least, that the DXY, whilst we've seen such a cooling off in the economy, we're looking at the currency actually rallying as a result of it, where it's just taken a massive sigh of relief from the inflationary pressures that it has been under over the course of the last 2 years or something. So that is something there to consider also. So that pretty much wraps it up there for the econ this week, guys. In terms of market impact in general, very, very minimal. It's an incredibly slow week. If I've missed anything, please don't hesitate to shout it out in the chat. Of course, I do miss things from time to time, and Scotty usually picks me up on it. So good on you, Scotty, mate. Carry on. But generally, from what I can see here, it's a very, very cool week in terms of news-driven events. We've got the BOC, of course, on Wednesday, which is going to be the highlight of the week in terms of market impact events. Apart from that, it's pretty damn chill. So if we think about the rhetoric for the last couple of weeks in the markets at the moment, we've seen things very, very slow. A lot of consolidation, a lot of sideways market price action. We've had to make the most of sort of a relatively sort of low volatile market state structure. And so necessary, the chances are we're probably going to continue with that. That's what I'm thinking right now. We're probably going to have to continue with the grind for another week or so before we start getting some decent catalysts driving us forwards. Now, I just want to pick up one other thing up as well here, team. Let me just go back to the chat here so I can see. Yeah, okay, cool. Yes, there's just one other thing as well that I want to pick up at the moment. There has been a lot of news about the Donald Trump situation going on in the US, and I really think we're priming up for something huge here. I don't want to get too political because the nature of my game, obviously being a public speaker to a certain extent and stuff, politics is always a very, very touchy subject for a lot of people. I try and remain completely professional in terms of my opinions and always think about the market impact first and foremost. But there does come a time where you just have to call it what it is. Trump's outcries of various things that he's been discussing have been extremely questionable, and there is reports from multiple sources that Republican insiders in the US are either sort of jumping ship on their support and their votes, or they are really hammering down on trying to get him under control. There's a lot of things that he's saying which are incredibly crass and very, very close to the line. He's crossing the line, actually. I could say that, but again, that's personal opinion. Of course, there's probably a bunch of real right-wingers, that are going to disagree. It's a difficult one, right? This is what I'm talking about when it comes to personal opinion and stuff. I have to be very careful. But some of the stuff that he's been saying is just insane. And it's almost like I feel like it's a ticking time bomb. And the market is running up to this event very cautiously. And I cannot put enough emphasis on the word very. Extreme caution is the nature of the market sentiment at the moment leading up to this presidential election. I don't know if you guys were around in the first Trump election, but things were incredibly volatile. It was the complete opposite of what we're looking at this time around. We were looking at a single tweet causing 150 pip spikes in random assets that you just couldn't even believe were anything associated to it. And it was like that for weeks, months even, of the presidential election were like that. Whereas this time around, we're seeing much the opposite. Things are incredibly slow. excuse me, things were incredibly, yeah. Good afternoon, Scotty. Good afternoon, Scotty. Sorry, buddy. Yeah, good to see you, mate. Yeah, exactly. You remember the first Trump days. It was a minefield. It was an absolute bloody minefield. And so, we have to, I was, all we've got to go with is what's happened in the past, right? That's the basis of our understanding for future price predictions. We try and use as much information as we can gather from the past. But this time around, things have been completely different. So I think, with how cautious the markets are being at the moment, we're really, really sort of, I think, building up to be, things are building up to be something very explosive in the coming weeks. Now, the presidential election itself, polls. Hang on a sec, guys. Yeah, so as it currently stands at the moment, Kamala Harris is up 48%, Donald Trump 46%. So it's relatively close. Now, at the moment, election day is towards the beginning of October. The beginning of October, guys. The beginning of November. So we're getting very, very, very close to that day. But the thing that is, I'm just not entirely sure what is going to happen if Kamala wins. That's what I'm thinking at the moment. I'm sure that's what a lot of people are thinking. It just seems incredibly volatile. It's an incredibly volatile situation. But anyway, I'll move on from this now. All I'm saying is market sentiment is incredibly cautious. We're not seeing the minefield sort of Twitter bombing of the markets that we saw last time around. Trump's coming out with some really, really sketchy things publicly. The guy seems like he's like a communist leader. It's really sketchy stuff. So we'll just have to see that situation sort of unfold, I guess, is the best way to say it. And be reactive. Be as reactive as possible. So anyway, that's it for the econ. That's it for the fundamentals that's going on this week. Again, really not much to discuss, not much happening. The ECB situation, I think they're probably a bit of ahead of the game. Yes, okay, some people can say that the ECB are behind everyone else in trying to get their inflation down, but actually, are they going to have the last laugh? Because at the moment, all I've seen are some of the major G7 countries actually chasing their tails, trying to cut rates now crazily because their inflation is dumping and they're going into steep recession. Whereas the ECB is doing things a little bit more slowly and yet a lot more controlled. So I think the euro could potentially, if we look at the euro at the moment against the dollar, it's on the daily time frame here. So euro against the dollar on the daily time frame, it's had one hell of a big sell-off, but I think this could start being a buy. I really do. And if we look at it long term, if we go up to the weekly time frame here for a moment, look at it long term, the euro against the dollar has been continuing to dump for a while. We did have the coronavirus sort of episode here with this really, really big sell-off down to 2022. But at the moment, it's just been ranging. And I think this is just a pause before we potentially see the euro continue to rally yet again. I think the euro get a breakout above this structural point. We could be on the runnings up for at least the descending level that's here in the chart. So if we look at this sort of descending level here as a really, really rough sort of gauge, rough benchmark, we could be looking at euro rally against the dollar right the way back up to around 118.26. That's a really bold call. Don't get me wrong. I know it's a really damn bold call, but fundamentally speaking, I think it makes sense at this stage. I really do. Right. That's it. That's it for the fundies. Let's have a look at what's been going on day to day and what we can be looking at this week. Right, so first and foremost, natural gas. Actually, do you know what? I will include corn because corn is good. So, corn at the moment, we've been coming down to this area. We bounced a couple of times. had a W reversal. W reversal actually failed, and now we're trading back on top. What we really need to see is a successful retest of the midpoint of the W. That needs to be confirmed, and then we can get rocking and rolling to the upside. At the moment, this is incredibly difficult to try and pinpoint any decent break of structure area for a trade. What I would be most keen on doing is looking at what happened in here, which is the previous high of the current bit of price action, and then looking to take that up to the high of this move here and basically trading the void between these 2 points. So if I bring that level of liquidity up to that area in there, and it's not the very high, but it is a area, because if we look at recent price action, we've had these break closes and retests and then the push down. So I've got to take that into account as well. This would then become the new trading margin, and so therefore that would be the new trade. So then I'd be looking at the breaker structure from this area in here as the potential entry point for this one. I would be locking in a pending order entry about there. Target profit's going to be at around 423.6, and the stop loss probably going to be about there as well. So you're looking at bang on a 1 to 2 risk reward ratio for that trade there in corn. So natural gas, energy sector has been absolutely dying recently. If we look at this at the moment, we've got tech's usually pretty stable at the moment. It's actually, it's doing okay. We look at energy minerals, we're basically at break even, slightly dipping down here. At this stage, it's not looking fantastic, but also, guys, you have to bear in mind we are at the very beginning of the week here, so a lot can change. But yeah, I mean, a lot of the sectors at the moment are looking a bit, looking a little bit bleak, aren't they? Technology is really the only one that we're seeing a little bit of a beginning of gains in there. So at the moment, I mean, the verdict's still out on this one. It's a failed, as far as I'm concerned, this looks like a failed retest of liquidity. Remember what I was saying last week when we were doing our daily checks, natural gas in the daily time frame, we were looking at the breakout of here, the close underneath, the retest. Well, for me, this retest is a little bit sketchy. I would have been hoping to see the retest come up to 222 and then start to dip, but actually we've come all the way up to a high of 225. And at the moment, it doesn't even seem like it's slowing down there. It looks like it could well continue. So today really is the big decision day. If in a day or two's time we're starting to break structure at this area, then there's no doubt in my mind we're going to be seeing natural gas shorts all the way back down to 190. But at this stage, it actually looks like we're going to have a failed retest. This will end up being a fake out, and then we'll be looking at a buyback back up to around 233. On the 15-minute time frame, these are very, very easy things to orchestrate in terms of the trading ideas that we'll be looking at. So first of all, 15-minute break close retest to 226. Target profit for this trade idea is going to be based in there at around that area. See all these retests before we get the big push down. So that's a really nice accumulative area there before we get that breach down to 226. So if we drag that one along, we're looking at the breaker structure. The break close retest will happen as a natural course of action. But if we're looking at a breaker structure, probably here, and yes, I'm not ignoring this wick through, but we have to think there's going to be a risk somewhere. So that's the one I'm going to go with. The fact of the matter is we have used this area many more times than we have used this one. So it makes sense, I would say, to utilize this as the breaker structure entry point. And then we'll be looking at taking that. So that's going to be our trade. So the long is going to be a pending order. We're going to have a target profit at 234. Stop loss is, I mean, to be honest, stop loss at 226.80 is absolutely fine. That's a good margin underneath there. It does depend, of course, on price. If you can see that there's a nice level in here somewhere and you want to put that underneath, which I might well do, then having it down here might be the better, sort of route to take. That's a 1 to 2.3, so definitely nothing to turn our noses up at. Still a really decent trade idea, but frankly, for now, a 1 to 3.1 is great risk reward. It also provides a really decent margin between there and here to account for any potential wick throughs of the markets trying to get, catching a few retail traders down here. So I think it does meets all the necessary criteria while still yielding a really nice risk reward ratio. And then of course, The shorts, I'm not even going to put a panel up for the short here, folks, or any kind of pending order. The reason being is we have such a huge trading margin between 215 and 190. It just doesn't really make sense. I would much rather see the market physically trading down at 215 before I made a decision on where we were going to short, because at the moment, trading at 225, we've got a really long way to go before we even get there. That's a full day's worth trading, so there's no point me even covering this until tomorrow. Okay, UK Brent. So UK Brent was really good for us last week. It's been a major contender. At this stage, there's actually, folks, not too much I'm interested in. At the moment, we have a lot of consolidation. It's been range bound for ages, ever since having the really steep sell-off that we did last week. We've got major conflicts happening. Things are escalating every single day with oil nations. It's just really, really high risk. And to be taking trades or even considering trades in a space where there is literally nothing to sort of focus on. I mean, we're right bang in the middle of last week's range here at the moment. So we've got the range high, and of course we have the range low, right? So that's the range, and we're trading right bang in the middle of it at the moment. So what we need to be looking at is the breakout retest of this area so that we can trade up to the upper limit of this newly formed channel. And this is well established, but it is baby, okay? It is a baby channel. It's brand spanking new. So it's not really going to have a great deal of power yet. But that being said, if we do get the break close retest of equilibrium here, the alarm's going to trigger and the trade will be taken, and we'll be looking to take that trade up to 77. So that's not a locked in pending order just yet, but it is a trade idea that is most certainly in the watch list. So I've just forgotten. So tagging up. That one's a blue, it's tricked on both sides. And to be honest with you, that one's probably going to be more of a long at this stage. No, not talking about silver right now. Gold. Jeez, man. Look at gold go. 2736. Actually formed a high up here of 2737.10. Insane breakout. You can just tell the safe haven money absolutely flooding gold at the moment. No doubt in my mind, significantly to do with the Donald. To be fair, let's be honest, especially with the crazy things that guy's been coming out with. I mean, we thought last time was bad, this time puts it to shame. So, there's going to be a lot of safe haven capital flowing out of the US dollar and into gold at the moment, and we can really, really see this take place. Interestingly enough, is the fact that if we compare the two assets, the correlation between the two is actually really quite broken. So we have been bullish at the dollar the entire way up here that we've been bullish gold. The last 2 days, or the last couple of days trading has been range bound, a bit sideways, but we've been bullish the whole beginning of the run up in gold in this move. So the market, so we're looking at the gold market against the dollar, and the dollar itself actually running in the same sort of direction. There's periods of time here where gold is significantly rallied and the dollar has actually just kind of dwindled along sideways. It's not really lost too much of anything, maybe 0.5% of its value. So really not much of anything, where at the same time, gold is breaking structures all over the place and rallying 6.72%. At the same time, dollar's lost about 0.48%. So really, really crazy stuff going on here with these two assets. Delete. So yeah, it's an interesting one. So looking at gold this week, I mean, crazy amount of gains here we're seeing on a daily basis. It looks like, to be fair, doesn't it? Looking at price action pullback, still, I'm always going to be looking for a retest of structure before I get in long somewhere. 15-minute time frame. The most recent point of structure on the daily chart is 2680. That's a really hell of a long way down from where gold's trading at the moment, granted. So I would be more on the side of looking for areas like this, for example, where I can be taking the asset down to. So if we're looking at a structural breakout, let's say possibly in here, might be all right. Maybe we're looking at that as trading margin. For me, that's still too optimistic. I'm actually of the nature of taking a trade idea down to here with a much, much smaller trading margin and still looking at the same, relatively speaking, it will be maybe one less, but still looking at that really decent risk reward ratio. I mean, if I'm looking at a breaker structure trade here, target profit's going to be right there, and we're looking at the stop loss being about there for a 1 to 2.16. Happy days. I mean, that can be turned around in a couple of 15-minute candles if the thing gets going enough. So that's kind of what I'd be looking at here. And then if you want to take this one down here, you copy and paste your trade idea. You bring that down, you set that up, and you're looking at a 1 to 2.85 or a 1 to 3, for example. And you can just kind of trade that separately all the way down to 2680 if the market does end up retesting that area. Looking at it at the moment, it's not stopping though. I mean, we've just at this stage hit a new all-time high. Look, 0.46, 0.48 that we're looking at the moment there. So that's a new all-time high that we've just looked at. At the moment, these all-time high trades are very, very easy to carry out, incredibly so. We're looking at break closes and retests of the most recent anchor points. So this one is one. We're looking at the breakout, the close above, the retest, and then we're looking at fixed 1 to 2s constantly. So break, close, retest, 1 to 2 risk reward ratio trade idea. Okay, and then we're looking at break, close, retest, and then we're looking at a 1 to 2 fixed trade idea. And then we're looking at break, close, retest, and we're looking at the same thing again, right, guys? So we're just doing this over and over and over and over again. You're not looking for lottery ticket wins, okay? You're not a bottom feeder. You're not a desperate trader. You're a consistent trader. You're trading like the big boys do, okay? So get out of the mentality that you need to be looking for a 1 to 6 and just take consistent 1 to 2s over and over and over again. If you lose small. If you win big. That's the nature of the markets right there. Okay, so just carry on doing that for as long as possible. As soon as you see a counter trend break of structure, okay, so let's say for example, we've got this break close retest that we're looking at here. Let's say for example that the break close and the retest actually fails. So the market comes way below. So let me just draw this in a blank space. So market's coming up and we get a break close and the retest comes down and it breaks the structural point here. Then what do? It's time to short. We have the stop loss above the liquidity point. We have the target profit at the next point down, and you continue trading the shorts all the way down the row, just like I drew out for us in this actual space here. So looking at this area here, entry. This area here, entry. And you continue shorting all the way down for as long as you can make it. So that's gold at the moment. So gold, that's a split one as well. 1 to 2s on top. Looking at counter trend breaker structures for the shorts as well. So that's fine. Right, how are we doing on time here, folks? Right, been on for 35 minutes. I've got to leave in about 15. Yeah, I've got about 10 minutes. That's fine. Okay, right, let's hustle then. Aussie CAD, 15-minute time frame. I know James has been in this one. I think he said a short. Depending on where he got in short. I mean, that's done really nicely. So could be a decent trade idea for him in the bag. Have to wait and see on that one. Looking at the daily time frame in the Aussie CAD at the moment. This is where we're trading. It's a little bit of a jumbled mess. Not a great deal of excitement in there. But the Aussie CAD, as it has been repeatedly, is a very, very consistent trading instrument for us. At the moment, we're looking at this being the floor. Okay, so this is the most recent floor that we've got to work with. If I go back in time and I look at this area here and I say, okay, that's my floor, that's what I want to utilize as a breaker structure point for shorts, then you've got a pretty decent area for target profits, like this, for example, which is a really nice area for a TP. You also have a TRF, which is slap bang right in the middle. Well, a little bit below middle, but it's there regardless. So your trade idea for the short, pending order for the Aussie CAD, entry, stop loss, and your target profit all the way down there for a 1 to 2.4 return. Not bad at all. Your long is a little bit messy. You've got your breaker structure point, which is very, very clear. That's not a problem at all. But you have a TRF and the TRF is situated in there, and then you have your TP, which is above that one, which is here, approximately. So your TRF comes quite close to the TP point, which is never a great place to be in, because the market is more likely to reject a TRF closer to a TP up at the highs than not, like this, for example, where it could quite nicely travel below. So you're looking at approximately, I would say, a 1 to 2.62 on that one, roughly, for the long. And I would leave it there. I mean, that one is a really solid breaker structure point. Really, really nice. So getting through there is going to be our first point of call. If we can get through there, then the chances of us rallying are quite strong. They're quite significant. Same as the short as well. If we look at back in time here, we've got this highs for this big move down. If we go back in time, it kind of loses some of its clarity here, and that TRF starts to have more actual respect. So do be aware of this one, okay? You definitely, don't dismiss it entirely, but you're in the trade. You are probably up over a 1-to-1, yeah, so 1 to 1.36 when you get to that TRF. So you don't need to think to yourselves, oh, I'm taking a trade idea directly on top of liquidity, because that is not what we're doing here. Worst case scenario, you see the price bounce for like the 6th time because it can't make it through there, and you get out at a small win. Worst case scenario, you get stopped out and you lose a 0.25 trade anyway. So where's the problem? Okay, no issues is there. So let's move on. Aussie yen. Aussie yen, that's last week's anyway, we don't need to care about that one. So Aussie yen right now, looking really, really shaky this morning. No consistency whatsoever, just kind of dwindling. The floor and the ceilings are very intact. They're well established. They've been active for a while now, but we are trading in dead space. We're right slap bang in the middle. So for me, Aussie yen's going to be a no-goer. Aussie NZD. Let's have a look at the daily charts. Daily time frame. We had a fake out, pulled back. Secondary attempt had a fake out, pulled back. This doesn't look good for bulls. This is looking pretty bearish. Definitely as though there's someone quite big in there sat bringing those orders back down every time we get close to 110.70. So this is going to be a high priority level, 110.70. It's going to be a bit of an order block there, I'd say. Yeah, a bit of a barrier, I would assume. We've got this area down here. Okay, so this is quite nice, quite rich. This is all neutrality. So this is neutral area. We don't really want to get involved in this per se. We want to wait to see the breakout of either side of these levels. We don't want to be long the Aussie NZD until we are way past 110.90. And we don't really want to be short until we're past this area here. Now, this area here is not too bad because that's close to price action. But the long, we're a million miles away from a good couple, if not 3, strong bullish days for the Aussie NZD to break through all of these structural points. And we don't have any major fundamental catalyst this week in either the Australian dollar or the New Zealand dollar to assist us. So for me at the moment, the short would seem like the most viable outcome for this trading asset. So if I'm looking for a target profit, that's going to be the lows there. Not bad. Breaker structure points already in the market. I want to clear out this little nub here as well, so I'm just going to put that in there to well articulate it to myself. Entry point's going to be below that point there. Target profit's going to be down here, and you're probably looking at about that for your stop loss. So maybe a 1 to 1.85 on that trade idea, which isn't the best, but it's not the worst. That's not bad at all. So that's going to be a short. Right, Aussie dollar. Nah. CAD Swiss. Let me check if there's any questions or anything. No, good. Okay. CAD Swiss. I don't know, folks. What are you thinking about this one? So we've got a well-established floor. Very well-established floor, in fact. Really nice. The ceiling is not bad. I would say inconsistent, but not terribly inconsistent. I don't like The fact that this is just stopped there and then reversed, that's a little bit unnerving. But if we can get in down at these lows here, that would be really nice. We're a relatively far shout away from those lows at the moment. Do we have the space for a short between where we are currently and the floor? Because looking at this area in here, I would say probably. If we look at that in there, so and bring that up as well, yeah. So this, 1, 2, 3, 4, 5, 6. So we've had 6 attempts at this margin with a 0 failure rate. The failure rate is dictated via price action either breaking through the floor on a first bullish attempt or breaking through the ceiling on the first bearish attempt of the trade. Neither of which has happened in the 6 times it's passed between these two trading margins. If we go back in time, let's go back in time and look at these two. So we had 1 failure here versus 1 success, another success, and another failure, where a short entry opportunity was viable, but the market broke free at the highs and came on top. So 2 success and 2 for failure, and that's the beginning of it there. So 2 success, 2 failure, and then 6 success. So 6, 7, 8. So we had 8 successful attempts and 2 failed attempts, which is a 2 to 8, which is brilliant. In a nutshell, very, very good. I like those odds. Okay, so then what we're thinking about here is viable entry opportunities. I'm not going to be looking for any break close retest because, frankly, guys, this is the bottom of an area. Okay, so we're not going to be looking for any BCRs here. We're looking at catching a falling knife professionally. So if we look at a breakout structure there, target profit down at the floor. Stop loss probably going to be at around 62.47, I would say. I don't want to have it any tighter than that. That's a 1 to 2.37. So not bad at all. I'd take a punt on that. Good odds. Right, CAD yen. We actually don't have any yen exposure at all right now. I'm just going to check the euro yen quickly. Oh, blast. What was that? 7 o'clock this morning. Yeah, that's kind of left the station without us, unfortunately. Again. A really nice established range in this euro yen, but it's a range within a range, isn't it? Because we've had the nice one up here, and now we've been stuck between these 2 small areas down here for a while. Very, very strong sense of price equilibrium. But then are we looking for the positive balance of price inside a range? Not really my ideal. And then again, I'm not a huge fan of this CAD yen either right now. Really solid entry this morning at 6:45. And now we're in the middle. And the ceiling's up here at around 108.80, 96 even. Which is miles away from where price is trading at the moment as well. So, as it stands right now, I am going to take the executive decision to leave out both of the yen crosses there. And I'll revisit those tomorrow to see where they land. And then, of course, we have the Euro Oz. And that's even earlier. 5.45 is the breaker structure there. And now we're trading in the middle of damn nowhere there as well. Yeah, a little bit of a shame here with this Euro Oz. But again, guys, that's just the nature of the markets. Is where they are. So I'm not going to question it. I'm just not going to trade it. And then finally the Euro NZD, and I must get onto those stocks because we're now at 12.45. I really need to get going. So Euro NZD. Oh, this isn't very good either, is it? No. Got some big points coming into play relatively soon, and then we have the previously used floor situated there, which doesn't count for anything. Oh, well, yeah, I guess it does actually. No, we've got to break those retavers. Retested it just there, didn't we? Okay, so where's this one? I'm just going to recycle some old zones here. So we certainly could be looking at trading back up to 179.60, couldn't we? But we're just not anywhere to enter into the down trade now. Okay, so no fixed trade ideas on this asset yet, but what you'll want to do is either trigger a trade idea from down here long, or trigger a trade idea from up here short, or trigger a trade idea after we get, actually, no, don't allow the short, but the long, you could look at the break close retest and then the breaker structure entry for the long as well. So you could look at trade idea long, trade idea short, trade idea long, break close retest, and another trade idea long. And whichever happens in between these margins, like that. But there's not going to be any pending orders because we're neither here nor there yet. So we have to wait for the market to do something with these. Right, moving on then. Let's have a look at our stocks. So NAS 100 first of all. US tech stocks on a Monday afternoon. Let's go. So NAS 100. This is a 15-minute chart, bearing in mind. I need to clear this chart down. It's disgusting. Right, there we go. Right, so NAS 100 US Tech Index. We've got this area in here. That would be situated as a level of support, I should imagine. We've got money in the market there. We had money in the market there. It's come all the way back up to 2039. So what we're going to be looking at here is a potential bounce. There's a very clear, well-articulated level of structure to be broken, which is this point in here. And then we're going to be looking long, not a million miles away. I'm not looking for anything too showy today. It is a Monday. And we're going to be looking long to the here. So breaker structure entry, target profit, trading margin. That's your long. Hopefully we can stay under that margin because it is 1:45, of course, and we still have an hour and a half until our market breakout takes place. The opposite side of today's trading will take place with a TP down here, I believe. Yeah, I'm not going all the way down there on a Monday. No chance. So yeah, that's going to be my TP. We're going to not worry about this fake out. And we're going to be looking at the breaker structure down below this area in here. Very, very short trade this will be, guys. And then we're going to look at the position of breaker structure, target profit, and stop loss in there for a 1 to 2.6. And that would be the short trade, making this area in here our no man's land for today. And hopefully it can stay that way until the bell rings. For the US 30 Dow Jones, which has had a really nice sell-off today as well. Recycle this zone, we can see it's bouncing perfectly from it, so we're going to carry on using that. There's no reason not to. Copy and paste this zone, we're going to bring that up on top for the ceiling. This is our trading margin, much wider than the NAS 100s, much more room to breathe. However, with the inclusion, of course, of a TRF, which is situated right slap bang in the middle. Now, the breaker structure for this one, the US 30 Dow Jones is already doing, just a heads up. We have that area in there. We have this area down here. Okay, these are the two breaker structure areas. In here is our no man's land, where the price essentially needs to sit and chill now for another hour and a half. And then we can look at taking the long up or the short down. Now, the long won't be going actually up to the 43.32 area. It will actually be coming to the base that it formed here. So that's going to be your TP area. And so this is your true trading margin. And for the short, really, really easy, guys. We're looking basically at the previous low. I'm going to recycle an old zone yet again. That's going to just drag across. Breaker structure underneath here. Target profit 43.077. Stop loss essentially looking around 43, I'd say 43.195 for your stop loss on that US 30 Dow trade. Now, of course, when you're trading this on the 1 minute time frame, you're going to be able to tighten up things. So you may find that your risk reward differs very much so from the ones that I have been talking about. But that's absolutely fine. Of course, the reason I do this is because, generally speaking, your risk rewards will benefit because I'm using very broad strokes, very broad strokes analysis here. Not, don't even need to go down to the 1 minute time frame. It's very clear in what needs to be achieved. So breaker structure is going to be, 43.22. Stop loss is going to be at around 43,205. Target profit all the way up at 43.28. I mean, that's right there going to be a 1 to 3.5. So really, really nice risk yield on these trades today. Just be aware that it is a Monday. Things can be incredibly temperamental. And also don't forget the trading conditions that we have been participating in, because these conditions on a daily basis at the moment are extremely cautionary. We don't really have too much of anything going on. And we all jump up and down and get really excited when we see a 50-point move. But the reality is that's nothing at all for the stocks. They could move 10 times more than that consistently, and they have done. But we're just not seeing a great deal of that at the moment. So you have to take that into consideration. So if you have the opportunity and you're looking at the chart setup and you're looking at something like this, for example, break a structure of this point here and a target profit of your TRF, then take it. That's a fantastic trade idea. And frankly, if you're taking this trade idea instead, you are probably going to get the exact same risk-reward ratio, but be in the market for half the time. So there's no reason to take the full breadth of the trade idea up there. Well, not up there, but to here, 43.29. Okay? Just as a little bit of a pro tip there, a little bit of a free pro tip for you. Okay, so that's it from me, guys. I do have to get rushing off now. Got my appointment coming up in moments. So I'm going to wish you all the best of luck today. I hope you have a really, really good day out there. Just remember again, folks, it is a Monday. So don't get all negged out or anything if a couple of things go wrong. Also, on the flip side of that, don't go and take loads and loads of trades, hoping that everything's going to go right. It's the first day of 5. Hopefully it's going to be a good week. And I hope all goes well. And I'll catch up with you guys in the chat throughout the day to see how you're getting on and providing any additional trading insights as they come up. So take care, have a great day, and I look forward to catching you then. Thanks, guys. I'll see you. Bye-bye.